Good morning, everyone. Thank you for joining us this morning. Again, I do want to take the time and congratulate you all taking the first steps towards home ownership. Woo-woo. Great to you. You know, 2021 is near. I see you guys are getting your goals in gear. So let's get started. So, Asking You Shall Receive Realty is the name of my real estate company. I am the owner, operator, and broker of the company, and I have agents and realtors that work with me here at the company. We are recently going through a transition, and I'm going to do business as Helping Hands Realty because I realize that helping is what our company does. So I think that not only you're going to ask and receive the home of your dreams, but we also are helping hands as well. So that's why you see the two names of the companies here on this spreadsheet this morning. All right, so since Alex gave me full control of this, I guess I got it down pat. Here we are. So here's our team. Our office is located here in North Palm Beach, Florida, right off of US 1. Again, here I am, Siobhan Edgecombe. 8 years is my real estate history. I was a regular realtor for the first 3 years of real estate. Then I decided to go back to school to become a real estate broker and open up my own real estate company. As of today, I have these different realtors, Jacaranda, Suntrell, Shannon, Lindsay, and Kimberly. We have most of the east coast of Florida covered. We sell homes from Port St. Lucie, Palm Beach County, Broward, Dade, and a few over in Naples. So there's no limitations to as far as where we'll go for you, okay, depending on where you want to purchase your home at. All right, so this screen here is the back of my card. I think that this is the most wisest idea I could have ever come up with. It breaks down the amount of money that you have spent, and I'm guilty of it as well, over years of time paying rent. If you take a look at the one in the upper left hand corner, for 1 year of rent of an average rent of $1,500, if you do it times the months, you'll see just in 1 year you spent $18,000 towards someone else's property, towards someone else's investment that could have been your own. In 5 years you've invested $90,000. In 10 years, $180,000, and in 15 years of renting, you've been spent $270,000 worth of dollars towards someone else's property, okay? And if you have an interest in purchasing a home in either Port St. Lucie, Palm Beach, Broward, or Miami, the home prices are going to be about $270,000. So this is just like a little simple breakdown of what you have spent over the years, and that's if your rent is only $1,500. So if it's more than that, just imagine how much more you have spent over the last 15 years of renting. Okay, so why rent when you can buy, right? That's why you're here taking this class today. Enough of that. So here's the 1, 2, 3s of preparation for home ownership, okay? I'm not sure all of what Alex have went over with you so far this morning, but I'm going to just reiterate go over some of the steps that we go through as far as purchasing a home. All right, so the first thing you want to do is make sure your bills are paid. We're going to make sure those lights are on, the water is on regardless, but the key to paying your bills is making sure they're paid on time. So as long as your credit history reflects a payment history of on-time payments for like no 30-day late pays for a consecutive 24 months, this will, 1, help your credit score increase, and 2, this will help keep your interest rate lower when it's time for you to get a mortgage loan. So the mortgage lender, they look for 2 years of on-time payment history from your credit in order to get you a conventional loan. Now with the FHA loan, you can have some late pays on your credit. I don't want you to get discouraged if you do have late pays, but that will only allow you to get an FHA loan, which is also okay as well. The difference between the FHA and the conventional loan is that the conventional does not have a PMI, which is private mortgage insurance, which can run an additional $100 to $200 extra per month. And the FHA always have PMI, which is the private mortgage insurance, which is between $100 and $200. So with a clean payment history of 24 months, you can qualify for a conventional, and you can bank on your mortgage payment being $200 less than a FHA mortgage payment. But we'll touch more on that later in the presentation. Number 2, maintain employment. They also want you to have at least 2 years of consecutive employment history. Now, Due to COVID has changed a lot of things. It has caused families to be out of work and things like that, but that's okay. You can be out of work for up to 90 days, okay, without employment. But if you start working on that 91st day in the same field that you were working in previously, the lender will count it as a full year of employment and you will be just fine. Now, the only time that becomes an issue is if, say for instance, you were a truck driver, okay, and then the trucking industry fell to the wayside and you were out of work for, 3 months, and then you picked up another job in customer service. Those are two separate fields. So technically, the bank cannot count that as a full year of employment if there's two different types of employment involved. But if you went from trucking, took a break for 3 months and went back to trucking, they can count that as one. But if you went from trucking, took a break, and now you're doing customer service, the clock restarts when you start at a customer service, because now it's a whole nother field, okay? Same thing for you ladies. We can touch on that in detail as well if you need more clarification. So make sure you guys take notes, write down your questions, because at the end of the class, I will have time to answer any questions you may have. The third step is gather your documents. Now, if you are employed through a company and they control your pay stubs, at the end of the year, you're going to receive a W-2 based upon your work history for that year. So that W-2 for the last 2 years, the lender is going to require. Now, for those that are self-employed like myself, you guys have a different way of filing your taxes. You're going to have to 1099 yourself. So if you are in the habit of not reporting all of the funds that you've made cash over the year, but you want to purchase a house within the next year or two, you have to start accounting for all that money that you made cash and allowing the IRS to tax you on that dollar amount, because your tax returns is what the mortgage lender is going to look at to determine how much mortgage you can afford. So if you have, extra write-offs in your tax filing due to the fact you don't want to pay extra taxes, you may want to scale back your write-offs on your cash income, because the more money you show, the more money you can qualify for on a mortgage, okay? So keep that in mind, self-employers. I know how easy it is to stuff that cash in the mattress, okay? But you're going to have to show your hand for 2 years, and then you can go back under the radar once you achieve your home ownership, okay? So number 4, fixing your credit. There's so many rumors out here about, oh, I heard you only have to have this for a credit, or you only have to have that for a credit. Let me clear the confusion. In actuality, all you need is a 580 credit score to get approved for a FHA loan. It's true, 580 is all you need. However, if you want to have the best interest rates, and you want to utilize this home buyer certificate that you're going to receive by completing all your documentation and meeting with Alex at the end, and receive down payment assistance from any of these programs that the county, the city, and the states provide, they require you to have no less than a 640. Okay, so anytime you have plans on using other people's money as far as down payment assistance towards your closing costs, they want you to have a middle score of 640 and no less than. Now, let me just break down a little bit about how they look at this credit. So if you have three credit scores, you have Experian, TransUnion, and Equifax. So if Equifax is 650, TransUnion is 640, and Experian is 630, the score that the lenders look at is the middle score, which is the 640. Okay, so that's how you know which number that lender is going to look at is the middle score out of the 3. So some people say, hey, I got a 700, but I have a 680 and I also have a 650. They're going to look at that 680, not the 700, just to clarify how they look at your credit. Okay, now number 5, saving for a down payment. Yes, saving for a down payment is very important. The down payment amount that you have saved is going to help determine the amount of loan that you can qualify for, believe it or not. Because what the lender is going to do is they're going to take your pay stubs, they're going to take your monthly debt, And then they're going to see how much money you have saved in your bank account. Because every lender, no matter if you go FHA or conventional, they want you to have no less than 3.5% skin in the game, aka money down towards the purchase of your home. So if you only have, we'll say $3,000 saved, they're going to say, okay, well, based upon this $3,000 that you have saved, this is only 3.5% of this dollar amount of house. So it would hinder you from being qualified for a higher dollar amount, because they can only count your assets of what you have saved and say, well, this is the amount that you're going to have down towards your house. Now, if you receive a gift for a family member, or you know that you're coming in money into the future, you can say, hey, I don't have this now, but I'll have this in the future. You let your lender know that, and then they'll be able to count that money and say, okay, well, based upon this information, you not only qualify for $200,000 now, you now qualify for $250,000, because we know that you're going to have that 3.5% in your account, in your possession, by the time you make it to the closing table. Okay, we could talk more about that as well. Number 6. So once you have 1 through 5 all in order, number 6, you're ready to get approved by a lender. Okay, by this point, as long as you maintain your employment, you paid your bills on time, you filed your taxes appropriately for the last 2 months, your credit score has an average of 640, you got some money saved in the bank, and now you should be ready to get approved. Okay. All right. So you went to the money man and they approved you for a loan. So now it's time to start shopping for a home. Okay. So in the left box, let's go over that. So first, we want to start researching the different city programs for purchase assistance funds. Free money is the best money. Would you agree? So for completing this home buyer class, your certificate of completion will open many financial doors for you. Yes, it will. Just off topic, I know the city of West Palm Beach right now, they have up to $55,000 towards the purchase of your home. So if you only qualify for $150,000, they got $55,000 extra waiting for you if you qualify. And part of their credit qualification is already being approved by a loan and having a 640 credit score. But that's neither here nor there. We can talk more about that later. So some banks have grant programs that provide up to $7,500 towards your closing costs and up to 3% towards your down payment. Ask us what those banks are. Not every bank provides you with closing cost assistance. Not every bank provides you with down payment assistance. I've had people come to me with, approved by Wells Fargo, because they've had Wells Fargo for the last 10 or 15 years, and they think that going with that bank would be beneficial to them. But that's not always true, because those big box banks like Bank of America, Wells Fargo, Chase, not to put them down or anything, they're not big on lending money towards mortgages. And they for sure do not have any down payment assistance programs that's worth your time. They may say, oh yeah, we have a program, we'll give you $2,500. $2,500 barely scratched the surface when you purchase in a home. I'm sure you much rather get $7,500 or $10,000 towards your home. So before you choose a lender, you want to make sure you find out if they can benefit you with any additional incentives as far as down payment programs, or at least willing to work with different down payment assistance programs. Okay, if they don't provide it, they need to be at least able to process a down payment assistance program once your realtor bring one to your attention. Okay, so there's many different grants programs out here. Some grant programs are non-repayable versus some grants that are repayable. Ask us what the difference is in your programs. Your realtor should know the different programs that's out here and which ones are repairable, which ones are not repairables. Okay, now going over here to the next box. The next box is going to touch bases on the different applications that's out here to help you guys see what's out here for sale on the market. So online apps such as Realtor.com, Zillow, Trulia are great, but working with a licensed realtor is much more beneficial. You get to meet us in person, speak and express what type of home you want, and we are here to make sure your house shopping is as easy and possible and a success. Okay, we're able to provide real-time property statuses, whether the house is active on the market or actually closed and sold. We help save wasted time. Bring your pre-approval letter to your first meeting, or I'll connect you with my lenders and or title companies. It is more important for us to already have a budget to work with. Waiting on a pre-approval after you have found your home is not the best practice, because most contracts only provide 10 to 30 days for the buyer to make loan application. So our goal is to help you find a home in your dreams and achieve home ownership stress-free. Now, let's touch bases on the difference between a listing agent and the buyer's agent, okay? Now, the listing agent, also known as the seller's agent, represents the seller of the property, okay? The selling agent represents the buyer, which is you, and it's also known as the buyer's agent. So the listing agent is the ones that market the property for the seller, and then the selling agent helps the buyers find the new properties, okay? So you may receive, when you go on these different online apps and Realtor, Zillow, and things like that, you may have like these different realtors pop up underneath the screen. Those are not necessarily the realtors that belong to that particular listing. They can be very well selling agents. So if you don't already have a realtor that you know, that you trust, and you feel comfortable with doing business with, then you're free to select those that's underneath that particular listing. But it's always best to work with a realtor that you feel more comfortable with, not the ones that's always advertised online, because you know nothing about them. You know, work with someone that you already may have came across or have some sort of rapport with, or maybe even you met in your home buyer class, hint, hint, you know, in order to be successful in purchasing your home, okay? So that's the difference between a listing agent versus the selling agent, just so you'll know for your records. Now, here's a big one. Buyer needs and wants in the house. Let me just read this through, and then I'll come back and break it down. So, needs refers to those items or necessities that must be available in the house that you are buying. These requirements cannot be compromised. Needs are tools for survival, and you should not purchase a home that do not fulfill the needs that some everyday needs include, such as adequate space, which is square footage, enough bedrooms for a family, a sufficient space in the backyard, an accessible house. Your wants, a want, as the word says, is something that you want. You can still buy a home even if it lacks some of the wants. Sometimes you can acquire these wants later. In essence, you can live in a home that does not have all that you want, but you can't in a home that doesn't have all that you need. So if you look at the pictures over here to the right, at the top, there's a more standard, modern looking home that any one of us would love to live in. At the bottom is more so like a mansion that we also wouldn't mind living in. But we can only purchase a home that's based upon your financial budget. So as long as the home that you are seeking for meets your needs, then that's a wonderful thing. We can't make decisions off of always wants, because what we want may not be in our budget sometime. So it's very helpful to be flexible in the things that you look for in a house. I mean, adequate space, square footage, that's a definite need. If it's you, your husband, and 3 kids running around, you need an ample amount of square footage so everyone can feel comfortable in the house. You know, enough bedrooms. If you know that you need 4 bedrooms, don't settle for anything less than 4 bedrooms, because you know that you want everyone to have their own space in bedroom size. If you want a big backyard, make sure you choose homes with big backyards. You don't have to settle for anything less. And make sure the house is accessible, of course, meaning in your range as far as affordability is concerned, okay? And then maybe later down the line, you can afford this mansion. Maybe you'll call me back and say, hey, Vaughn, you sold me this house 5 years ago. Our family has grown. Can you rent this house for us? We're ready to go get our mansion now. Then I say, okay, sure, let's get your house rented. We'll take that rental income, add it to your work income, and then we can go shopping for that mansion, okay? So please distinguish your difference between your needs and your wants. All right, so here are the different types of homes. You may all know the different types of homes, but sometimes you'll be surprised people do not. So I do have to include this in the presentation and do a little explanation of what they are. So the first picture here is a lovely single family home. These are not attached to your neighbor. Most single family homes has more privacy, yard space, and room to build or add on to your property. Okay, single family homes are designed for families that do not mind getting in the yard doing yard work, that do not mind having family gatherings and barbecues and things like that. Now, for my older clientele, they usually gear towards condo purchases and townhome purchases because they've had their share of cutting the grass. They've had their share of the big gatherings and things like that. So they don't mind paying someone an extra couple bucks per month to take care of these outdoor things for them. So here comes the townhomes, okay? So townhomes usually mean stairs. Upstairs and downstairs is the layout, and the property is connected to your neighbor. These types of homes usually has a monthly community fee to be paid to the community association. These fees are forever, and as long as you home the townhome, yes, you can pay your mortgage balance down to zero, but that homeowners association will still have their hand out and want you to pay them to cut those grass and trim those bushes and to keep the pool and tennis courts up to par, okay? So keep that in mind when you're buying into communities that have these community associations, okay? Next are condos. Condos are usually in the form of high-rises, multi-level buildings stacked on top of each other. And to keep up the parking lot, lawns, pools, and workout facilities, etc., there's a condo association fee paid either monthly or quarterly. Those fees are forever and as long as you own a condo. Now, some of my younger clients, they actually like condos too because they're traveling, seeing the world, and you know, they don't want to have the maintenance of a single family home, or they might not even like the stairs in a townhome, so they prefer a condo because condos tend to be lower in price as well. However, you have to be well aware of the types of loans that these condo associations accept. There's only 6 condo associations in Palm Beach County that accepts a FHA loan. All the other hundreds of condo associations in Palm Beach County do not accept FHA. They only accept cash or conventional. So if you have your mind set on buying a condo, you have to make sure that everything is A+ across the board when it comes to your payment history, your credit, and all those wonderful things, because you want to be able to qualify for a conventional loan. You can buy a condo with a conventional loan, but you still have to be very careful because some condos are still cash only. So working with an experienced realtor would help you save wasted time as well, knowing which properties will work for you and which ones will not work for you. All right, so let's touch bases on neighborhoods and their requirements. Most people are unaware of the restrictions and authorities certain HOA and COA associations has. Townhome and condo communities all have restrictions and a lot of authority. Even if you own a home within a community, it's unreal but true. They can deny your purchase application for past felonies, not meeting a certain credit score requirement, and or age specifications. Yes. So working with the experienced realtor will help you stay on track and avoid false hopes by educating their home buyers of what to expect from different neighborhoods and communities. Now, when you're on those different apps that I touched bases on previously, the Realtor.com, Zillow, Trulia, things like that, they don't always tell you up front that this beautiful 3-bedroom, 2-bath with the white picket fence and the dog that they throw in there for you is included. They don't tell you that this house is in a 55 and older community. So you may send it to your realtor, hey, why didn't you send me this beautiful home? It's only $180,000. It's everything I'm looking for. Why you didn't send this to me? 9 times out of 10, it was not emailed to you is because it was not in the criteria that you fit. Meaning, if you're not 55 and older, you may not qualify for that house. But those online apps don't usually tell you that this particular house is in a 55 and older community. You may see another house that has everything that you're looking for that's not in a 55 and older community, but there's an annual golf membership. You got to pay $30,000 or $50,000 a year just to live in the community. So knowing the different neighborhoods and requirements is very important. That's why you should always work with a realtor versus trying to find a home on your own, because we help save wasted times. Now, say for instance, you find a property that's a single family home, but you assume that there's no HOA. There are homes out here, single family homes, that also comes with homeowners associations. So you have to be careful in what you choose. So your realtor should be able to tell you, okay, yes, this is a single family home. There is no golf membership, but there is a small monthly, HOA fee, maybe $100 or something like that, because they don't cut your own grass. You cut your own grass, but maybe they maintain a pool that's in the community. Maybe they maintain a workout facility that's in the community. So they charge you for that. So this means you have to go through an application process with that HOA. Okay. Now that HOA may have certain specifications. They may say, hey, no felonies allowed. You may have got into some trouble 20 years ago when you was a youth, and you think that, hey, I've gotten this great job, I got my credit in order, I'm ready to buy a house. No one should hold my past against you. I agree. However, some homeowners associations don't look at it like that, and they can deny your application for things that has happened in your past. Certain credit scores. Some people say, well, if I wouldn't be looking for a house if I didn't have a great credit score. Well, you'll be surprised. Some of these communities out here, they have credit scores of crazy amounts. 700 credit score. Emerald Dunes off of Jog in West Palm Beach, they require the buyers to have a 720. Okay. Now, it's not that it's not possible. Some of you may have a 750, but those that do not, you have to make sure that before you submit an application or a purchase contract on a home, your realtor let you know that, hey, this home is in the HOA community, and these are the requirements. Based upon the details that I have on you, you do not meet that. So, just, listen and make sure that you guys stay on track, because these things are very important. I would hate for you to do a whole purchase contract, apply for the application at the HOA, and then get denied. It's just money that's being wasted. And then we've already went over the age specifications as far as the 55 and older community, okay? I had a client, she was in Port St. Lucie looking for a home. This is before she left her realtor and came over to me. She found this lovely home, put a whole contract on it, and it wasn't until the day of inspection that they found out that this house was in a 55 and older community. Now, how on earth could her realtor miss something like that? But that was grounds for her realtor to get terminated, and that's where I came into the picture. Now we're under contract with a brand new construction home, so yay to Melissa. But be very careful when it comes to those type of things. Okay, some things that you're not gonna know, but your realtor should. All right, so let's talk about the 4 steps to smoothly search, find, and get your offer accepted and not rejected. First thing that I always suggest my clients to do is get a new email address. So let me read this out. I can bet if your email looks anything like mine, there's a lot of junk mail in it that takes up a lot of space. So create a new email address solely for finding a home. Remember the passcode, write it down, text it to yourself, because we're going to use that email for a lot of beneficial reasons, such as e-signing your documents online versus printing numerous pages, and monitor that email for daily listings. So for my older clientele, I have them come into my office and I create them a Gmail. I make sure that they remember their passcodes. So I'll use that particular email specifically to send them properties and things like that. For my younger crowd, I still, suggest that you guys create another Gmail so you can separate the junk email from your real estate email. Because remember, everybody else in this class is looking for a home just like you. Everybody wants the best deal. So good homes don't last long. So if you use a regular email where all your junk falls into, and you may miss something that gets emailed to you, you don't want to take that loss. Take the time, create a separate email solely for real estate. Let your realtor use that email so you won't miss out on any deals, okay? Next, find. Our company will ask you to tell us exactly what you want in your home, and we will help you find a property by setting you up to receive the listings through the MLS that match your heart desires or very close to, depending on your budget. Please keep in mind your very first home may not be your last home, okay? I have had clients that were basically looking for a home. They wanted to become a homeowner, but their budget wasn't high enough to meet the market. So they had in the back of their mind that, hey, if I go ahead and buy this house now, fix it up, make it what I want to in the next 3 to 4 or 5 years, we'll be able to resell it, get our money back, and go and buy the home that we really, really want. very smart, because they can either fix it up and resell it, or they can fix it up and rent it and use that income from the rent to help qualify for even more of a mortgage loan, okay? So sometimes you may not find everything you want in your first home. You may have in the back of your mind, well, I just want to buy a home and live there forever. Then, you know, if that's the case, you may want to find something that matches all of your needs, not necessarily just your wants, okay? I've had clients to where they came in the office, they asked, and they received exactly what they were looking for. This young lady, she had funds from the city of West Palm Beach, and her budget, this was back in what, 2000 and I think 15. So the prices were lower then. She was only approved for $110,000. But when she came in, she told me what she was looking for. The very first house that I showed her was only 107. She received funds from City of West Palm Beach to help her buy it. It was a wood frame, 4-bedroom, 1 bath, and it was only 5 houses down from where her mother lived. It was perfect. So sometimes you don't have to look under every nook and cranny and crevice to find a house that fits your wants and or your needs. Sometimes the first few that your realtor take you to may just be the one. I've seen people be overly picky. I mean, it was the house provided everything they were looking for, but oh, the floors was the different color, and you know, they just never end up buying a house because they were overly picky. So sometimes blessings can come easy. You don't have to go through, you know, hell and hot water to find what you're looking for. Sometimes God lines it up for you to meet the right people and for that person to provide exactly what you're looking for. So don't make buying a home too stressful, okay? All right, so next, let's go see the property as soon as we can. Everyone in this class is a future home buyer and looking for the best home they can afford. As life has it, good deals don't last long. So book a showing appointment and be on time for your appointment. If you're running late, please contact your realtor within a reasonable amount of time. Everyone's time is valuable. Oh my goodness. I have had scheduled with clients, I'm sure you can only imagine. And I'm at the house waiting, and I don't hear from you. You'll think an alien abducted them or something. You're like, what happened to you? Oh, I got stuck in traffic. That's fine. Things happen. Call and let me know. I may want to run around the corner and, you know, grab a sandwich or something while I'm waiting. Just don't have me waiting. So be very, you know, cautious of letting your realtor know that you're going to be late or you have to reschedule. Communication is key in all types of relationships. All right. So the next one is ask. Ask your realtor for the home buying expertise. Ask us how much you should offer on the home based on sold comparables in the neighborhood. Then decide on the offer price based on facts and not opinions. Let me touch on that a little bit. Now, say for instance, you're in the market of buying a home close to your parents' home. They're a little bit up in age. You want to be close to them in the event something happened. So, and they may have been living in their neighborhood for the last 40 years. So they know everything that go down on their block. They know that Miss Lucy down the block just sold her house for $150,000. So now your antennas is up like, what, Pops? $150,000 in your neighborhood? Let's see if we can find something like that. But then Siobhan come along and find you someone else's house on the other end of the block, and it's $250,000. So you be like, well, they're asking $250. What's wrong with them? Miss Lucy's house only sold for $150. Well, this could be the very big difference. Miss Lucy may not have updated her house in the last 40 years. Her house could have been very well in original condition, needs a lot of work. She may have passed on to another life and is no longer even here. So her family and kids got a hold of it and they couldn't decide on what to do with the property. So they sold it for what they can get. Now, the house that I'm going to show you matches everything that you're looking for. That new roof, those new windows, the new air conditioning, that new water heater, the 3-bedroom, 2-bath with a big old backyard and a garage. That's why that one is $250,000, because it's everything that you want. You don't have to come in here and lift a finger. Just bring your furniture. So when you're offering prices on a home, you want to go by the sold comparables in the neighborhood, not the opinions of your family or friends, but the facts that's in black and white. Because what we do as knowledgeable, experienced realtors, we will send you a comparable list. We'll say that, hey, here's the house that you're considering. Here's 3 other homes that have sold in this neighborhood. Here's the pictures and here's the price. Now, based upon what you're getting, based upon what they look like and what they got for, we'll come up with a price in the middle. guarantee that will get your contract accepted versus rejected, okay? So now we submitted the contract, smooth sailing. The seller has accepted your contract. It's almost time to celebrate, but not quite yet, because there's some things that still has to occur even after the seller accepts the contract, okay? So first, we're going to submit the highest and best offer, okay? Bidding wars can be a waste of time and very disappointing. This is real estate, not storage container. Laugh out loud. I don't know if you guys seen storage container, but I have. Second, you want to allow 1 to 3 business days for the seller to respond to your offer. The home may have sentimental value or newly added to the market. So in most cases, a seller will hold out a few days with hopes of getting a higher offer versus making a hasty decision to accept the offer right away. Patience is virtue. I can touch back on that. I got experience with that as well. Third, once the contract is accepted, you want to order your 4-point inspection and appraisal at the same time. Your experienced realtor should have a few companies for you to choose from. If not, it's okay to find one yourself. 4, once the inspection results are back, your realtor will share them with you. Once the appraisal is back, your lender will share the results with you. Then we start shopping for homeowners insurance. Then your file goes to underwriting. Let me go over number 4 with you again. So the inspection company is an out-of-pocket expense that you as the buyer have to pay before you even get to closing day, okay? So it's always wise for you to get an inspection done on the property, because you can walk into a house that's beautiful by the eye, but behind the walls, those termites going to town. And there's no way that you, me, or anyone else will even know that they exist. So the homeowner inspector, they usually have a pest control company that comes out with them to do the inspection, and they will be able to determine if this house has mold, mildew, termites, or things like that. But that's something that you pay for, and you get a copy of that inspection report, and you get the 4-point inspection with it. Now, when it's time for you to shop for the homeowner's insurance, your realtor, I shop for homeowners insurance for my buyers, but some lenders do it for their clients as well. And I just suggest my clients go with the best rates that's best for them, because your homeowner's insurance amount is going to determine how much your mortgage balance is going to be, because you want a fixed rate account, and you want your principal, your interest, your taxes, and your insurance to be included in your mortgage on a per month basis. So you may want to go with the best homeowners insurance that best fits your financial needs. Now, let's talk about the appraisal. The appraisal is with the bank order. That's another out-of-pocket expense before you get to the closing table, but you can't order that. The appraisal, the bank that's giving you the mortgage loan are the only ones that can order the appraisal for you, because basically the appraisal is going to determine that the house that you chose for this dollar amount is worth the bank lending you that dollar amount. So you can't shop for that service, but you do have to pay for it, and then the bank will give you a copy of the appraisal. Now, another thing, you don't have to share your appraisal results with the selling agent. The only time that you have to share your appraisal with the selling agent is if the appraisal amount came back less than the dollar amount of your contract, because now you have to go into negotiation mode with the seller and say, hey, I know we got this house under contract for $250, but the appraisal came back $245, and they may ask for proof. So in that case, you send them the first page or whatever showing that it came back at $245, and now your realtor and their realtor need to start negotiating, or if we can come up with a happy middle on the seller reducing the purchase price to $245, or you agreeing to pay that $5,000 difference out of pocket. I never suggest you pay anything out of pocket, because now you're paying money towards a house that's not even worth it, okay? But you also can appeal the appraisal as well and say, hey, well, my realtor showed me this comp, this comp, this comp, and they all look like my house. They all sold for this dollar amount. Bank, I need you to send me out another appraisal, because I don't think that this guy knew what he was talking about. I see appraisals come all the way from Miami doing appraisals in Port St. Lucie, and they have no idea of value, but that's who the bank sent to the house. So there's ways to get around it and things like that. if you was to ever come across a situation like that. But if the appraisal comes back at your purchase price or higher, all your realtor has to do is let the seller's agent know that we're all good, we're ready to move forward. Okay, so once all these things are done, your file goes to underwriting. Number 5, once all results from reports and your financial rating is up to par and your file is clear to close, when you hear that, you know you're almost a home run. Then ask your realtor to schedule a closing date with the closing company. Okay. 6, if the results from the inspection report and or appraisal are unsatisfactory, it's time for your realtor to put their negotiation skills to work. And we at Asking You Shall Receive Realty are the queens of negotiation. Yes, we are. You gotta go on my Facebook page and look at all our success stories. All right, so offer contingencies. Previously, I mentioned to you, I said, hey, once you get that contract accepted, it's not really time to start celebrating and telling your families and friends about it yet, because you got to get through all 5 of these contingencies before you have a green light to purchase your home. So let's talk about the inspection report a little bit more. The inspection reports are valuable to FHA buyers. The report results protect everyone's best interest for purchasing a home with unseen issues, such as those termites that I mentioned earlier. Okay. The appraisal will let you know the value of your home. It's ideal to purchase a home with positive equity, which means your purchase price is less than the actual value amount. That's what we were talking about. So if you have the home under contract for $250,000, appraisal come back $255,000, you winning by $5,000. You can literally close on your house and go to the bank in the next 3 months and say, hey, I want $5,000 pulled out of my equity because I want to go on here and change the windows in the house or something like that. I do not advise, I do not suggest you do that. Let your equity continue to build, because you may need that equity to be taken out of your house later down the line. And it's not that they even give it to you. They'll give it to you, but you have to make monthly payments back on that. So you be careful when it comes to refinancing your home when you have positive equity, okay? The third is insurance. So based upon that 4-point inspection results, this will help determine the cost of your homeowner's insurance. New roof, new windows, new walls, floors, and appliances are all plus. Again, when you're shopping around for homeowners insurance, if you decide to look for that on your own, maybe you have Geico or maybe you have Progressive and you know that they offer some homeowners insurance. You may say, hey, well, let me talk to my auto insurance company and see if they offer homeowners insurance. You don't want to send them your whole inspection report. The only thing they need to see is your 4-point inspection part of the inspection and your wind mitigation part of your inspection. Now, wind mitigation part of your inspection is not always applicable. I think that's how you say it. The wind mitigation is only for older homes. So if you bought a home, I believe like after 1978 or something like that, then you have to include your wind mitigation. But if it's newer than that, all the insurance company needs is your 4-point. So you do get discounts for hurricane impact windows. You get discounts for new roofs. You get discounts for having an alarm system on your property. All those things are plus when it comes to insurance companies, and that'll help keep your monthly expenses low as well as far as the cost of your insurance. And your insurance is also part of your closing costs. We'll talk a little bit about that in the next slides coming up. All right, so the 4th one is code violations. If you're purchasing a home that has been vacant for a while, it may have city violations for grass and shrubbery. Make sure your closing title company is reputable and will do all due diligence on your home before you sign on the dotted line. Yes, if you're one of those buyers that have a husband that's Mr. Fix-It and he's like, babe, we don't have to find that house that has everything. I'll fix this, I'll fix that. So you may be drawn to those homes that look like you can get it for a reasonable price. And that may have, you know, high grass or overgrown shrubberies or something like that. It may be a foreclosure. So you want to make sure that those things that you see that's triggering you to say, hey, let's look into this house, are the same things that those city officials are riding around the city looking at as well. And it's all about money and it's all about presentation. So they may have started, you know, accumulating fines and stuff towards the house, and the seller is unaware because the seller lives out of state. You know, they're not even aware that the house is not being maintained, or they may have thought that the grass guy will still come to cut it, but the grass guy forgot about the lawn a couple months, something like that. So it can cause code violations against the property without the homeowner even knowing. So what the title company would do is make sure that they contact the city and say, hey, we got someone in the middle of buying this house. Please give us a list of if there's any code violations involved. If the code violations are an extreme dollar amount, the seller may be like, hey, I can't pay that, or I'm going to need time to get them reduced from the city. So this could also kill the deal if the code violations is higher than expected and the seller is unable financially to do it, or don't have any experience on how to get it done the proper way by going to the judge and have a magistrate hearing. Me as a real estate broker, I've done these all the time. It can be done. So just keep your eye out on making sure that your realtor bring you a good closing company that's going to do all the proper due diligence as necessary, or you do have the option of finding your own title company. All right, so the last one but not least is clear title. Clear title means there's no liens, no encumbrances, no judgments against the property, and your right to purchase is free and clear. That means auntie in Nebraska does not have a hand in the ownership of this home. You want to make sure that this house is free and clear to be sold to you. There's no IRS liens against the seller. There's no judgments. There's no encumbrances. So when they convey title from the seller over to you, you want to make sure that title is clean. Sometimes there's some clouds on the title that the seller may not even be aware of. So that's where having a reputable title company comes into play as well. Okay. So these are the different 5 offer contingencies. If you get through these 5, you're on the go. You're heading towards home ownership faster than you can believe. So let's talk about negotiating your offer. So after the inspection results are provided, you may learn that the water heater does not work, or the air conditioner is not cooling properly, and that crack in the tile floor is because of a structure issue or termites are present. Ask your realtor to negotiate the purchase price to reflect the cost of anticipated repairs. Use the negatives from the inspection report to negotiate a price lower or to have new items installed prior to final purchase. Okay. Now, let me just talk about this a little bit. When I first got started into real estate, my buyers will be like, well, the house is listed for this. Can we only offer that? And I'll be like, sure. Based upon the comps, I think that dollar amount is fair. But sometimes I come across buyers that are very unreasonable in their expectations on what they feel the house should sell for. So what I usually do is always suggest, hey, go closest to asking price as possible. Maybe if we give them what they're asking for, they'll give you $5,000 towards your closing costs. So if the house is $250 and you're approved for $260, that means you're still $10,000 less than what you're approved for. Let's give the seller what they wanted, $250, and ask them to give you a $5,000 credit towards your closing costs. Because keep in mind, if you're a homeowner already and you're selling your home, you have in the back of your mind what you're willing to walk away with. So if you got the house listed for $260, you probably already know there's going to be room for negotiation. So you have in the back of your mind, okay, I'm willing to walk away with a sales price of $250, right? So for instance, the house is listed for $250. They have in the back of their mind that they want to walk away with no less than the $240. Then we offer the $250. We ask them for that $5,000 closing cost credit. They still $5,000 higher than what they're willing to walk away with. 9 times out of 10, they're going to accept your contract. Boom. Now you got to accept the contract at $250, and you get $5,000 back towards your closing costs, plus the $10,000 that the down payment assistance program that you're going to qualify for taking this class come into effect. Now you got $15,000 towards your closing costs and or down payment that you get to save in your pocket at closing. So you may end up only spending $5,000 at your closing table because your realtor has negotiated a purchase price to include a closing cost from the beginning. Now, follow me on this. Once the buyer and the seller are in agreement over the repairs and seller credits, we wait for the repairs to be completed and the items are re-inspected. 2, the seller accept the credit for the money and fix the items yourself after closing, but only if the repairs are not major and home is FHA financeable. Some things are non-negotiable. Let me clarify what I just said, okay? So, From the beginning, when we first submitted that contract at $250 and asked for the $5,000 back, you already got that $5,000 credit, okay? Now we went ahead and inspection done. And we realized that after inspection that the water heater, the air conditioner, and the house may have some termites. So now you on the run for even more credit. So you could say, hey, I only asked for that $5,000 towards my closing costs because, you know, me and my wife, we can use that credit. You know, we can save this $5,000. But now we've had the house inspected and there's some things going wrong with it that we didn't even know was wrong with it. So now it opens you up to even more of a credit from the seller because you're going to give them the opportunity to say, hey, will you fix these things that we found on the inspection report? Or are you willing to give us an additional credit towards our closing costs, okay? Depending on the seller is, sometimes they like to fix it themselves. You know, they may have already had this on their to-do list to have fixed, but their handyman or their contractor didn't get around to doing it. So they may have already worked it out in their budget to have it done. So they may say, no, we won't give you an additional credit, but we will have them fixed. In the event that occurs, you have to have your inspector go back out, or your realtor can go back out, depending on how complex the work is, to go and determine if the repairs are finished before you get to the closing table. Or if the seller just does not have any money to make those repairs, the second line of negotiation would be you saying, hey, well, the water heater and the air conditioner is going to run me about $3,500. It may run you more, but I'll meet you halfway. $3,500. Are you willing to give us $3,500 towards we'll buy the house and we'll fix these things when we finish? Yeah, sure. I'm ready to get rid of this house. I love you guys. You know, it's great. I'll give you an extra $3,500 because guess what? They got in the back of their mind that they were willing to go down $10,000 from the beginning. So now you got your $5,000 from the purchase price. Now you got an extra $35,000 for the repairs. They're still under that $10,000 mark that they was willing to go from the beginning. I can't speak for all sellers, but from my experience, this is how they tend to look at numbers when it comes to bottom line. There's usually a $10,000 gap between what they're asking for and what they're willing to accept. But working with a knowledgeable realtor, you have to know when to ask for a credit and how to ask for a credit so you can get those credits, okay? All right, so on to the next. I hope you guys have some questions for me because I love asking questions at the end. Okay, so let's go over the difference between closing costs and down payments. Oh my goodness. This always get my buyer, so I definitely had to add this into the presentation. So let me just read it real quick. So the down payment is the amount of money you contribute towards the purchase of the home, while the closing costs are the assessed fees that need to be paid in order to complete the deal. Yes, there's a difference. So the cost of financing a home are the purchase price, which is the price tag, the down payment, which is a percentage of that purchase price that can be anywhere between 0 and 30%. 0% if you are a veteran, 30% if you've saved that much money and you want to put 30% down. Interest equal to cost of borrowing the money. So yes, if you got a loan for $250,000, they're going to charge you interest on that money, and that's going to be part of your prepaid cost, which is your closing cost. And then the interest is part of your closing costs as well. I got it separate, but it's all in the same. The closing costs equal the fees and expenses paid by the buyer to complete the purchase. So just to give you an idea of what the closing costs are, I can't name everything that's part of your closing costs, but the big ticket items in your closing costs, which is separate from your down payment, is your insurance prepaid, your homeowner's insurance. So if your homeowner's insurance based upon the value of your house and the condition of your house is $3,000 for the year, they're going to collect $3,000 up front in your closing costs so they can put that in your escrow. So that means when the second year roll around, your money is already there because they collected it from the beginning. And two, you've been paying into it the first year that you've gotten your loan. So your closing costs of $3,000, that's what adds up at the bottom line. Your your homeowner's insurance, your taxes. If there's taxes involved, that if you buy the house in June, half those taxes belong to you, the other half belong to the seller. So the seller, well, the title company, I should say, they'll charge you your half of those taxes up front. So when the following year rolls around, you have a surplus in your escrow account to pay your taxes. So that's a big chunk towards your closing costs. What else is towards your closing costs? The fees that the lender charged to do your loan, the fees that the title company charged to process your clear title. There's a whole bunch of fluff when it comes into closing costs. So your closing costs equals usually about 3% of the total amount of house that you're purchasing. And then your down payment is usually another 3 to 3.5% if you're going FHA. But it could depend on the type of buyer you are. If you're veteran, 0% down payment, hands down, you don't have to pay that if you're using your VA loan. But it can go up to 30% depending on how much money you want to put towards the payment of your home. So 2 separate costs. So altogether, usually you pay about 6.5% to 7% together towards the purchase of your home. So when you hear people saying, oh, I had to pay $20,000 to close on my house, well, that's because they are including your down payment and your closing costs, and that does usually run about $20,000. Now, if you're working with our company and you want to utilize these different down payment assistance programs, we're going to get you connected with those that's going to give you $10,000 of that $20,000. So now you are already $10,000 saved because you're using down payment assistance program. And then the other 10 that you still left out there to pay, that's when our negotiation skills come to play to see if we can cover that. Our company is so great. We've had buyers come to the closing tables with $1,400. One of my buyers came to the table and received a check back at closing, okay? They put $2,500 down for their deposit. I got the seller to give them $7,000 worth of credit, and they used that $10,000 program. They received cash back at the closing table. It's real, it's true, it can happen. But you have to work with a realtor that's very experienced and know what they're doing out here in order to achieve those type of results. All right, so now you've purchased the home, everything was good, you got through the inspection period and everything. Now, this is a little extra that I added to the presentation that I think is very beneficial. It's just your Florida homestead exemption, okay? Let me read through this real quick. So what is it? The Florida homestead exemption is an exemption that can reduce the taxable value of your home by as much as $50,000. It's offered based on your home's assessed value and offers exemptions within certain value limits. So who's eligible for this Florida homestead exemption? To be eligible, the Florida homestead exemption, you must meet these criteria. 1, the property you want to claim exemption for must be your permanent address or the permanent address of someone you claim as a dependent on your taxes. 2, you must have lived at the property on January 1 of the tax year in question. So if you hope to claim homestead exemption on your 2019 taxes, you must have lived in that property in question on January 1, 2019. So in this case, if you were to start looking for a home now, you got a contract accepted and you moved in January 1, 2021, you can file your homestead exemption, okay? Because we still got a couple months left in 2020, just, you know, for the year is concerned. Number 3, you cannot have rented the property for more than 30 days in a given year. Renting the property for more than 30 days for 2 consecutive years or for more than 6 months is considered an abandonment of Florida homestead exemption. Yes, this $50,000 tax exemption is only a benefit for those that use their home as a primary residence, not an investment, okay? Now, how to get the homestead exemption, all right? So in order to receive the homestead deduction for your Florida taxes, you have to fill out an application form and demonstrate your proof of residence by March of that year for which you wish to qualify for. So in this case, March of 2021. To qualify for the Florida homestead exemption, your 2019 taxes must have been filed by your paperwork by 2019. It's a year late. I need to update it to 2020, but you guys, I'm sure, have the idea. The form you have to complete is a DR-501, and you have 3 options for completing and submitting it. You can complete it online and select from the state's e-file option, or you can print the form out and mail it to the Palm Beach County Appraiser's office down there on Olive Avenue, or you can go in person and visit one of their in-person service centers and complete the form there. One thing that's not included in here, your driver's license needs to match your new home address. That's also an additional requirement in order for you to get the homestead exemption. Okay. Oh, it's at the end of the class already? Oh my goodness, I flew through this so fast. So I hope the information I provided was helpful and easy to understand. Good luck with your home buying process. The office number I can be reached at. That's also my personal cell, and that's our location where we're located at. And there's a picture of me, my fax number and everything. And let me see here. How can I get out of here, Alex, so I can do the questions and stuff, or see the, hold on, I done messed up. Okay.
There you go.
All right.